This show is produced by the Hartman Media Company. For more information and links to all our great podcasts, visit hartmanmedia.com.
Welcome to the American Monetary Association's podcast, where we explore how monetary policy impacts the real lives of real people and the action steps necessary to preserve wealth and enhance one's lifestyle.
It is my pleasure to welcome a returning guest back to the show, and that is none other than forecaster Martin Armstrong. It's been several years since he's been on, and I'm really glad to have him back. He has some very interesting theories and insights, and I can't wait to dive into them with him today. Martin, welcome back. How are you?
Oh, nice to see you again.
It's good to see you. I want to first ask you just for an overview of Martin Armstrong, if you will, and your sort of general philosophy, and let's get into your outlook and all the details of that. But I'd just like to get kind of a very high level overview for our listeners who don't know you and should know you, because your work is really, really fascinating, of what you're all about.
Well, actually, it started back in the 1970s. I had a client who was one of the executive VPs at Franklin National Bank, which went down in 1970s, in 73. And, I was more or less like a trader in understanding things of that nature. So it came to me, he says, would you come take a look at this? You understand this stuff. Because Bretton Woods had just, collapsed in 71. And I went in to look, and the bank basically was the first bank to fail because it lost money on a 10% move in the US dollar versus the Italian lira. I mean, they didn't teach these things in school, so you really had to learn from trading. So pretty much after that, just about every foreign exchange crisis I got called into, even that, by the time 1985 and they were forming the G5, I was one of the people called in. That's when the dollar went to, so record highs, the British pound went to par. And James Baker was there just saying, we're going to lower the value of the dollar 40% to help reduce the trade deficit. Mm-hmm. And I wrote to President Reagan. I said, you're crazy. You just sold a third of the national debt to Japan, and you're going to lower the value of the dollar by 40%. They're going to sell.
And are we still in 1973 when this is happening?
No, now this is 1985.
Oh, okay. Oh, well, yeah, Reagan's president, obviously. Yeah.
So then what happens... these people in power really don't understand international capital flows or anything. I warned them they were going to cause a crash within a couple of years, and that became the 87 crash.
Which literally, by the way, listeners and viewers, Martin predicted that crash to the day. I mean, this is amazing. The crash of 1987, that was Black Monday, right?
Again, it illustrated how people in power have zero understanding of international finance.
Yeah.
It really doesn't. And I got called into the Brady Commission on that one. They just didn't understand. They were like, first they were going to go blame computer trading. And I basically argued, I said, look, they actually interviewed a lot of fund managers and asked them, why did they sell? And nobody really knew. They said, the Dow's down 1,000 points. I don't know. And you picked up the phone, you called the broker, you said, why? And he says, I don't know. So the prudent thing to do is you sell to get out because you don't know why it's going down. Mm-hmm. So, my accomplishment there was at least at the Brady Commission report at the end, they said, well, we think foreign exchange had something to do with it. That was about it. But this has been going on all along. I mean, when they were forming the euro, they came to me on that. I mean, I've been involved in absolutely everything on currencies. They named me the forecaster of the year because I met actually with Switzerland and I told them the peg was going to break. And they said, oh, they thought they could hold it. I said, I'm sorry, you're not going to be able to. Mm-hmm. Same thing with the Soros and the British pound. When I was called in, I said, you got to devalue the pound. They said, oh, we can't because John Major made a promise that he wouldn't do that. So I'm the one that wrote the little paragraph and said, okay, fine, we're going to allow the pound to float to seek its own level. And they said, oh, brilliant. But it's the same thing.
Give us the year that you're having this conversation.
Oh, that's like 92,
Right. So was that before or after Soros and his?
That was Soros on the pound.
Okay.
Where he made all his money.
Right. No, well, I know that, but was it before or after the Soros trade is what I'm asking.
No, that was basically what, how he made money.
Yeah.
These people, they create pegs and fixed exchange rates. What they don't understand is it's a guaranteed trade. If I think it's going to break, I can bet $1 trillion on it.
Mm-hmm.
Right? If I'm wrong, I get my money back because it's fixed.
Yeah.
If I'm right, I make a fortune. That's what happened with Soros. He made all this money on that basic trade. And, so now he's around, manipulating the world. But
right. Yeah. With his crazy politics. So, Martin, tell us about your approach. I mean, you have a very data-driven, computer-driven approach to these things. Tell us about that.
Working internationally. And I mean, when we were going to open an office in Geneva, there was a lot of, and that was like 85, a lot of, I would say, resentment towards Americans back then. And I had met with one of our clients who was one of the top 3 banks in Switzerland. And I had listed, like European advisors, a bunch of different names like that. And he said to me, name one European advisor. And I was embarrassed because I couldn't at the time. And he says, you don't realize why everybody uses you. And I said, no, why? And he explained to me, and then it became obvious. After World War II, the European currencies were basically starting from scratch. And so the politicians used it. Say the Deutschmark's up against the dollar by 10%. That proves I did a good job. So consequently, all the analytical analysis in Europe became political. No bank would allow an analyst to come out and say, oh, the Deutschmark's going to go down, because then you're making a political statement against the politician. So he said to me, he said, you don't realize why everybody uses you. I said, no. He says, because you don't care if the dollar is going up or down.
Right. You're agnostic about it. Yeah.
Yeah. And then I said, it's just a trade. That's it.
Right.
So that's how we ended up growing. We ended up with offices around the world because we were effectively the largest foreign exchange advisor globally. So I did a computer model basically on what I saw and how things actually moved and how I would make decisions, et cetera. So it's actually the first artificial intelligence computer from actually 1970s with a 50-year track record. Every possible market is in there. I mean, today the computer writes reports all by itself. Put that online. We call it Socrates, and it writes over 1,000 reports on instruments around the world.
And do people subscribe to your computer service, or how does that work? How do people access it?
Yes. No, we probably have more institutions than anybody around because we're covering everything. I mean, every different country around. In many places, we're the only one that even does any analysis on it. But, we have institutions and individuals that subscribe to it, and they can usually just take whatever it is that they want. I mean, some institutions take the entire world, but the main thing that they like about it is that it's consistent and it's not a personal opinion type thing.
Right.
So they don't have to worry about if I went out last night and had too much to drink, so I got a headache and I didn't do my work right.
Right, exactly. So at Armstrong Economics, it looks like you offer 3 different membership levels to Socrates, right?
Yes.
Yeah, okay, interesting.
We try to bring it down even to
it's very reasonably priced, by the way. I mean, your data is really comprehensive. I know that.
Well, it's become more of a trying to do a public service, really, because we would get so many things. Oh, you guys only, advise the big institutions. What about the little guy?
Right.
So we have opened it up so that the little guy can come in, and it's like we brought that down to like $15 a month.
I know up to the pro membership is $150 a month. So either way, it's very inexpensive. Martin, let's talk about your economic confidence model. Is that something people get through their Socrates membership, or is that just data on that membership?
No, on the memberships, the computer's actually writing the reports. They get to see the timing arrays it's forecasting where the markets will peak and bottom during the year. The economic confidence model was something that I actually stumbled upon. I think a lot of the greatest discoveries in life are by accident, And, I had discovered a list of financial panics, but they did cover also not just the United States, but the world. They covered a period of 224 years, and there were 26 of them in there. So I just took the average, was 8.6.
Mhm.
And I thought it was just an average.
Okay, so let's talk about that. So what you're saying when you say 8.6 is 8.6 years.
Correct.
And this is the Armstrong opinion of how these economic cycles go. Every 8.6 years, there's a panic, and then there's a rebuilding period. And so, Martin, feel free to elaborate on it, but I just got to make sure I ask you, where are we now? Because, when Trump was elected, a lot of people thought this recovery was long in the tooth. And somehow they've just kept this thing going. So we want to know, everybody wants to know where we are now, and then, of course, where we're going.
That model's peaking on May 7th
of this year.
This year. And there's so many things that have happened precisely to the actual days. It's been quite amazing. And May 7th happens to be the swearing in date of the next president of Russia.
Oh, how interesting. And that'll be Putin again, I'm sure, right? He'll be in power probably for 30 years.
Well, I mean, a lot of that is Western propaganda about Putin.
Uh-huh.
Putin is actually probably the most moderate person, and you better hope that he stays there. Because behind him are really
radical people.
Yeah, they're the old communists, that look, every country has theirs. We have ours, like Victoria Nuland, et cetera. John Bolton, I think he would, invade Canada to get 3 Russians, But
yeah,
everybody has that.
Okay, but let's not get sidetracked with the political side. I mean, I'd love to talk about that, but since our time is limited, I want to get these cycles down. So May, did you say 7th of this year?
May 7th, it turns, and we'll be moving in towards a recessionary period into 2028.
Okay, but what happens on May 7th?
Well, that happens to be, it's the turning point on the model. So far, we know that precise day is the election of the swearing in of the president of Russia.
Right. But what does it mean, the turning point on the model? Is that a day that we should be pulling our money out of stocks, or overall recession? Is that when a recession sort of begins?
When we get closer to it, you'll see it, but we're clearly heading into a recession into 28, but we're also heading at the same time into rising civil unrest, where you have international war coming. So there's so many different things that are
right. But let me just get the date. So the May 7th, and when you say a recession into 28, do you mean 2028?
Yes, 2028.
So basically a very long recession.
Most of your recessions are at least about 3 years.
Okay.
This will be about 4.3.
Okay.
But because it also involves war and things of this nature,
it would be different. Yeah.
We're looking at probably more like stagflation,
where
the economic growth is down, but you're still looking at shortages and things of this nature.
And inflation. Yeah.
Still rise.
And by the way, early on in the pandemic, I predicted we would move into a stagflationary period. And so I agree with you there. That's coming. It seems like it has to come. But Martin, just before we go forward, and I definitely want to go forward more about what to expect, let's just look in the past decade or so. Did your 8.6-year model miss this time? Like, did it not happen, or was it sort of like papered over? Because we didn't really have any downturn other than the pandemic era, which is an oddball. That's not really like a normal economic cycle. I mean, just talk about the past 10 years or so, if you would, real quick.
No, it's pretty much picked everything correctly. You have to understand is that what made the United States the reserve currency to begin with? That was actually World War I and World War II. If everybody's running around over there, blowing each other up, the capital came here. That's even what the reason 1929 took place, because the money was already here from World War I. And then kind of like the dot-com bubble, that was the automobile bubble. And then, airplanes and things of this nature. So the Europeans just kept their money here. And that's when you get these big bubbles. Same thing in Tokyo. It's a capital concentration.
Right.
So it's not just domestic money, but international capital has to be brought into it as well.
Okay. So what does that mean to us now, though? But I mean, I definitely agree that, wherever that capital flows, it's going to have a giant impact on that economy. And we've definitely seen that throughout history. But tell us what it means to us now and just going forward.
In part, that's why the stock market has continued to make highs. You have, North Korea shooting missiles off over Japan. We got clients in Japan basically saying, maybe I should have some money in the United States.
Yep.
You have the Ukrainian war over there. You have the climate change nonsense, which has really severely hurt the European economy. And they seem to be starting to maybe back off. They realize that this is absolutely tearing Europe apart. So you have money from Europe pouring in over here. Then you have the Middle East going crazy. So it's kind of hard under those circumstances not to see the capital moving to the United States. Then you have this problem of the confidence in government is collapsing. I mean, even the polls at this point show that only 30-some% of the people still have any faith in governments in Europe and the United States. So the problem there becomes we have a lot of institutions that are moving to the private sector. Mm-hmm. You're better off buying debt from General Motors than you are from the U.S. government. Mm-hmm. Because if they go, bust, basically you get something out of a bankruptcy proceeding. When a government goes bust, you get nothing.
You probably get your money back, but it's just so inflated away, right?
No, it really depends. Sometimes they just go absolutely bust.
Uh-huh. I mean, do you think that's possible for the U.S. and its dollar?
No, you're going to see these problems emerge first outside the United States.
Uh-huh. I agree with that.
Europe is so much worse than the United States.
Oh, no question.
So is Japan.
Yep.
And
would you agree that so is China?
Not as bad.
Oh, really?
China has a stronger economy. China has figured out what made the United States the greatest economy and Germany not. Mm-hmm. Germany basically kept the mercantile model from basically the 18th century. Yeah. We build things and we sell it to other people. So if you look at the net worth of a German, it's actually below that of an Italian. Mm-hmm. Strongest economy, but they're so afraid of inflation, they keep taxes high and they press their people. Yep. All right. But they sell things to everybody else in the world. That's the whole reason why they were pushing for the euro. Eliminate foreign exchange risk, and they would be able to sell more products throughout Europe. So what you have over here is what's really behind the dollar. We have a consumer-based economy. Everybody wants to sell something to an American. If it's a BMW, a Toyota, or whatever, all right, this is what makes the world function, all right? So that's really what's behind the dollar. It's not, pretty much anything, gold and things of this nature. You've got Russia, which had their largest gold reserves in history in 1917, and it's probably the richest country in the world from natural resources. Mm-hmm. But they're not the reserve currency of the world. It all depends upon the political setup, the people, etc. You have to really understand that. I mean, I had a client that when the Berlin Wall fell, he had property that was in the East, and he was going to open up a factory over there. And I warned him. I said, I'm telling you, I've been behind the Berlin Wall before it fell. You're making a mistake. Yeah. He said, oh, Germans, you don't understand. They got good work ethic. Well, he opened it up and basically went bust because the Europeans, the Eastern Germans, basically they had no ambition. Right. It was like, here's the broom. You're next in line. Go sweep the floor. That's it. Mm-hmm. So you have to understand it. That's really what's behind the dollar. It's the people. It's the people that make the currency worth something.
Yeah. Yeah. I agree with that. So I think the dollar is stronger than a lot of people say it is. So that's a really good point. So Martin, I don't want to wrap up without getting really your opinion of what our future looks like and what we should do about it. So recession, you believe starting in May, and that'll be a stagflationary recession, it sounds like, right? Where we have inflation, but low growth at the same time and higher unemployment, right?
Eventually with the unemployment, yes.
But that'll take a while.
Right? Yeah, it will take a while, mainly because of the whole COVID thing created all these shortages and set that in motion.
And I think the other thing on the employment that a lot of people are missing is just the simple demographic issues, right? One of the things I read that really kind of struck me in a book recently talking about these demographic trends, Martin, was that if you talk to a business owner today, you could tell them or ask them, do they realize that anybody they will hire in the next quarter of a century has already been born? At least if they're from the US, right? They've already been born. So there is a real demographic issue that is impacting, going to continue to impact the labor market, and I think keep it somewhat tight. Of course, we've got automation, artificial intelligence, and that's another discussion. But you think the unemployment, the layoffs will come, but that's going to be later in the cycle, it sounds like, right?
Yes, because we also have war coming. So and then you're going to be looking,
and that's good for employment.
Yeah, drafts and things of this nature. And the Democrats actually have snuck in. They intended to draft women too. But, this is, a fate that we're all going to have to watch, and it's happening everywhere around the world. Even Zelensky's drafting 18 to 60-year-olds.
Yeah, I know. He's taken any age now. They're so desperate. Yeah.
You have to understand, this is basically, we're still looking at the concentration of capital in the United States because of all these problems outside. However, at the same time, the confidence in government is collapsing. And so you're having the capital move more into the private sector side. So that's stock market, real estate, things of this nature are still quite strong. So you have to understand, why that is also taking place. You still have another trend taking place in the United States is the great migration from the blue states to the red states.
Yep, that's a good thing.
California is like the number one state everybody's leaving. It's got the taxes are way too high.
Right. Yeah.
So you have to look at all these different things. And the net combination of that is still the U.S. is looking at a concentration of capital. So that's going to color the outlook going into 2028. And it
bodes really well for the U.S.
Yes. And to the detriment of most other places.
Yeah.
We're looking at the rising prospect of war into probably 2027 because of the shenanigans in elections and things of this nature. The 2024 election is probably going to be a real watershed event. And more than 60% of the people believe it may not even happen. But people have to understand that constitutionally, they don't actually have to have an election. The Constitution does not require a popular vote. The president is elected by electoral college, and they can be appointed by the states. So there actually doesn't have to be an election. Whether they would actually go that far, who knows? But legally, that's what they could do. Right. But this whole polarization in the country between, left and right is coming, and the computer's projecting serious civil unrest after the election going into 2025, because I don't care who wins, neither side's going to accept it.
Yeah.
So all this is creating turmoil, and it's only increasing the decline in confidence in government, and that means bonds, etc.
Okay. So inflationary future, right? I mean, you said stagflation, but I just want to be clear. That means inflation. And how much inflation should we expect over the next few years? Do you see it rising significantly?
Yeah, because you're still looking at, as things percolate around the world, a lot of things come, are imported. I mean, I had ordered a new refrigerator. And it was put on hold. I said, what's the problem? They said, oh, well, the chips come from Thailand.
Yeah.
That contributes to the whole problem of this stagflation thing, where you're looking at shortages that push prices higher.
Yeah, right. Absolutely. Absolutely. Okay. So any advice on what people should do knowing all of this, where their investments should be?
Well, you have to understand they're also pushing for this CBDC stuff.
Yep.
And that's mainly discussions I've had with a number of different governments around the world. They really seem to think that eliminating the cash, they're going to collect 35% more in taxes. They'll eliminate the underground economy. So that's really the objective. And the side benefit is being able to track everything. But people in the United States should realize that, all right, where China is going to a direct CBDC, the United States constitutionally cannot. So the Federal Reserve is not going to do a CBDC. It's being allocated out, and banks are going to do it.
Oh, interesting. That's good news for us.
Well, not necessarily. But the reason is the dollar would still be canceled. If The central bank in the U.S. did it, and they wanted to say, okay, let's look at this guy. Where's his money coming from? They need a search warrant.
Uh-huh.
If a bank does it, they don't.
Uh-huh.
Okay, this
Right.
is the COVID model.
Yeah, that's exactly what they're doing with big tech, and is they're basically letting big tech be a government proxy. Martin, we got to have you back on to talk about this stuff where we have more time. I absolutely love these conversations. Unfortunately, we got to wrap up for time constraints, but just any final words, and give out your website, tell people wherever they can follow you or whatever.
Well, they can go to armstrongeconomics.com. We don't sell advertising. It's completely free. You don't have to put in your email address or anything like that. We believe in privacy. But, understand what's coming. Look at more private assets versus public assets. I would not be interested in any government type bonds or anything of that nature. Look for more of a private sector type arrangement. Mm-hmm. I mean, even gold and silver, I would look at the silver coins dated 1964 and before. So I think, when you do eliminate the cash, you're going to have a black market. And I think that black market will probably still be in small denomination precious metals.
Yeah, that you can trade. Martin Armstrong, thank you so much for joining us.
Well, thank you for inviting me.
Thank you so much for listening. Please be sure to subscribe so that you don't miss any episodes. Be sure to check out the show's specific website and our general website, hartmanmedia.com, for appropriate disclaimers and terms of service. Remember that guest opinions are their own, and if you require specific legal or tax advice or advice in any other specialized area, please consult an appropriate professional. And we also very much appreciate you reviewing the show. Please go to iTunes or Stitcher Radio or whatever platform you're using and write a review for the show. We would very much appreciate that. And be sure to make it official and subscribe so you do not miss any episodes. We look forward to seeing you on the next episode.